Hello, good evening. My name is Crypto Cape, and today I want to continue the last video I did on multiple time frame analysis. This is a video requested by Busayo Elesami, so I did it already, but then I found a very good example today while checking out some trades, and I decided to make another part explaining in detail the three methods which I highlighted in the first example. If you remember from the last video, I said the essence of using multiple time frame analysis is to have one time frame as your directional bias time frame. That is the time frame you want to look at and have a directional bias. If the coin is up in an uptrend or if the coin is in a downtrend, you want to identify your structure so you do not trade against a trend on an higher time frame. Then the essence of the lower time frame is to perfect your entry, to have a good reaction time, to have a low risk and high probability trade. So you want to perfect your entry, you want to time it, you want to make sure you are limiting the risk you take in the market. So today I want to use this YFI coin as an example. So I have identified some structures on a 45-minute time frame which I would like to discuss with. So first of all, let me go to the daily chart on this and say I'm not using the daily chart on this, I'm using the 45 minutes as the higher time frame. But just for us to see what it is like on the daily time frame is why I'm coming on the daily. So we have this high to this low to this higher high to this higher low. Back here I'm broken. So it is in a bearish movement, right? And this is the last high leading to this low. So for this coin to be back bullish, we want to see this side broken. Probably it's on the way there. And that is purely market structure, right? But looking at this movement around here, we can see this up move to this down move and back to this up move, which means we are at least semi-bullish, or we are bullish on this semi-structure, not considering this higher structure here. So going now to the main time frame, you can have different time frame you use for your directional bias. I said it in the last video, depends on the type of trader you are. If you are a scalper, you have nothing doing with the daily time frame. If you're a day trader, then you want to look at least the daily time frame and maybe the 4-hour time frame or the 1-hour time frame or below, anyone that suits you. If you are a swing trader, then you want to consider the daily chart, probably the 3-day chart or the weekly time frame. Or minimum time frame you even look at to perfect your entry when you're a swing trader is a 4-hour. Some do until 12 hours, some on the 8, some on the 6, or the minimum for swing trader should be the 4-hour. If you're a position trader, you have nothing doing below the daily time frame because you are looking at the monthly chart, the weekly chart, and the daily chart. The daily chart will be for your entry, to perfect your entry, whereas you're looking at the weekly chart or the monthly chart to see the direction. So today I'm trading as a scalper. My major time frame is a 45 minutes time frame. So I have highlighted some demand and a supply zone which I want us to go deep into and see what caused the reaction on the low time frame. So I have identified this demand zone on this 45 minutes time frame. So this is an eye, swing guy, and this didn't break it, but this did break it, and this could have been my demand. This, let me mark it please, this could have been my demand. And as you can see, it reacted there a bit up. It reacted before it got taken out, which is why I marked this supply as the supply that broke this demand. But personally, I wouldn't trade this demand because it's too close to this broken high, and this didn't close above this last high. And then the movement after the break of this high is just not strong to me. So it is a demand, but a weak demand. Hence, we see the little reaction on it before being broken. So I won't even bother to trade it. But the bottom one, which is the origin of the move that broke this high, is a good demand to trade. And I've highlighted it on the 45 minutes. And here is another 45 minutes supply zone, which broke this demand. As you can see, it got broken here. And this move, three black cross, is a price action pattern. And then we found support on this demand, and then this supply itself eventually got broken. So I'm coming to that. So like I said, if you are taking the trade on your main time frame, if you're a day trader, maybe you are looking on the daily time frame, you are marking your zones, either support or resistance or supply and demand. If you are marking your zone on the daily time frame and you are also taking the trade on that daily time frame, then it's either you do set and forget and just forget about confirmation entry, like we see here. On this is my major time frame, right? We see this price action coming into this demand. Let me remove this. We see this price action coming into this demand zone. Then it just tips it and runs off. Now, if you're waiting for a confirmation, this is the trend line, right? This will be the trend line. I'm using the close there. And drawing a trend line, you have to use pivot or swing eyes to a low, then this to a lower low. So it's a valid. And if you are looking for a break of trend line before you wait for the retest to take the demand on this 45 minutes time frame, the trend line has been broken here, and yet we do not have any retest yet of any level whatsoever leading to this break of this threshold. Even if you are trading this green box I've marked there as a break of this supply, it's no longer the same as this demand zone. That means you are taking another demand zone and not this current demand zone. If you are waiting for a break of last supply coming into this demand, which is here, there is no retest of this whatsoever. If you mark this as a demand and this may be a retest, well, it's also a form of demand because we have this channel move up. We have this channel move up. We have this channel move up. Which is a weak movement. Then we have a two strong candles here, which means demand came into the market here and here, and this is the last selling candle before that. So this can be a demand coming into the supply, but it didn't break the supply, so you won't be trading it because it can easily break, but lucky it didn't. So waiting on your major time frame to take the trade, you may not be able to enter if you do not do set and forget, which is the limit order. You place your order here and set your stop loss just below it, which can fill your order and then go run off with it. So now let's look into the lower time frame, which is the main reason people use lower time frames to take their entry, and see exactly what happened around here. Then we come and see what happened around here. Then before we come into this part, those are the three parts I want to explain. So this is a 45 minutes time frame. Like I said, coming into the 15 minutes time frame will do us no good. Why? Because it's too close to the 45 minutes. It's just three 15 minutes candles that make up 45 minutes, which means we do not have much price action. We do not have much activity on the 15 minutes as compared to the 45 minutes. So there is nothing to really see. And looking at it, this is where we have a touch of this demand. This might be the supply coming into this demand. This also can also be the supply coming into this demand. Let me mark it. So if this are the supply which got broken here, and this is probably the candle that led to this whole move, the actual break here, all this price action inside can be, yes, they are demand, but they are inside the supply, which I do not like to see. They are inside the supply, and then too many candles here might show there is no much demand left. That is, we should leave that for supply and demand lesson. So here today is about confirmation entries using multiple time frame. So there is so much action here. Even if I'm waiting for the coin to retrace back here, it did it. I didn't get that. It just come into the demand zone and then runs off. So I don't want something close to my major time frame. I want something a bit far. Like if you are trading on the daily time frame, we are going into the 4 hour or 1 hour to time your entry. You can even come onto the 15 minutes. Talk less of when I'm trading the 45 minutes. I want to see the price action on the 5 minutes or even the 1 minute. So coming into the 5 minutes now, what do I have here? I have the entry into the zone. I have, this is a pivot low, right? It's a three candle formation. The lowest low having two candles with higher lows on both sides. So that's a pivot formation, which means this last green breaking this is my supply for now. On the 5 minutes time frame, I also wrote that. Okay, so now we have three methods we can use to take this confirmation trade, right? Either a zone, a demand zone breaking a supply zone, or the break of a trend line, or the break of market structure on this particular low time frame. So this 5 minutes, the one we have, if I'm to rule a trend line from this action here, like this, it's not a perfect line, but then because we have this low and this side coming to this lower low, you can also rule like this from this side, like this. So let's take this, and then this is my supply. Now last supply coming into this 45 minutes demand on the 5 minutes, then I have the price rally back up, and then it got tripped here. If you can see, this is the highest high. Let me mark this again. This is the highest high, and then we have this little tripping. We have this little tripping of the zone, which means it has been stop wanted, but supply has been taken out. Not closing above it shows the price might come down. Some people might want to take this as their demand leading to the break of this supply, but like I said earlier on, it's inside of this zone, and then the move away from this is not strong enough. Those are one of the features we want to look at. So looking back here, we can see this is an engulfing candle setup, which is what some people will like to see as a confirmation before buying the trade. And then this is the origin of the move that broke this supply. So I want to take that as my demand. And coming back into it, this means I'll be placing my limit order here and having my stop order just below here. It is better to risk an amount under 1% than risk the whole 45 minute zone which is 3% for the same gain, right? Going back to the 5 minutes now. So this should be where we have my limit order, and this will be where we have my stop loss. If this breaks, then just look for another lower setup. But then we have this coming back into it, taking my order along and running away with it. That is how you want to trade confirmation. And then what happened here? What happened when the price retested this entry zone where I'm taking my trade. This trend line got broken, right? And we didn't get a interaction with it on the next candle, which means the trend line be successfully broken. Now the demand leading to the break of that trend line is a good demand as well, which means you want to take it. So you can either be setting your entry limit order here and having your stop here. Then your risk will just be less than 1%, just like here. And then we have a retest of that zone too, and then a run off. Looking at the risk reward setup for this, usually 3-to-1 risk reward setup. So when you trading and you have your stop around here will be your 3-to-1 ratio risk reward. Here is the 5-to-1 ratio. Let me mark it so you can see that clearly. This is a 3-to-1 or 1-to-3 risk reward. Risk 1 to gain 3 at this point. So if you have entered here, you transcom here, back, then you hit your profit target here. If you are targeting the 1-to-5 risk reward, that is, you risk 1 to make 5, then here is where you'll be taking your profit. Either you say this one's your first target for profit and this as your second profit target. And also, if you are trading this, maybe you didn't use this supply, demand breaking supply, you are using the break of the trend line, and you have your entry here and your stop somewhere around here, then this will be where you are taking your first profit as well, and this will be where you are taking your second profit. That is 3-to-1 risk reward, 3-to-1 reward to risk, and 5-to-1 reward to risk. So that is that. Trading market structure with this, I can't really see a really pullback, but maybe this will be the high to break on market structure. And if this high is the high to break and it got broken here, like I said, this, you won't like to trade this because it's, number one, it's too close to the high. Number two, only just one candle and the next candle is a pulling back candle. You don't want an instant coming back. You want it to move further away a bit before coming back. Then this will have been a good zone to trade. That means you're also trading this very zone using the market structure. Once you see this side taking out, then the demand doing that is where you want to take the trade. Now let's move quickly to the supply before our time runs out. Okay, this supply is also the 45 minutes zone. So what actually happened? Okay, now you see this is a pivot high, right? That is a pivot high. That means this is a demand. Let's mark that. Now we have this demand coming into here. We have this little reaction, then it keeps going up. We have another high here, another pivot high, 3 candle setup. We have another one there, then coming back, they're coming back, and it got taken out here. This side is higher than this, so it got stripped, which means we have another demand, right? And this is it. But then it looks like this doesn't want to come down, right? So this is a demand now we want to break. Then did we get a break of this demand at all? Oh yes, we did. Yeah, it's little, it's very minute, but it tripped it. I think you can see there, it tripped it. So which, like I said, this candle, if we have this move away, like we don't have this green candle but another red candle, then this green candle will have been a perfect demand. But then it's just inside the demand and we have another reaction, instant reaction back to it, which means it's not a good demand. Then we want to, supply, sorry, we want to come back to the origin, which means this is where will be our origin for this supply. This demand has been taken out. This low, if you're trading market structure, this is a 9 to a higher low, higher high, higher low. now higher high, higher low, and then this low. Okay, this is the last low leading to the higher high. Yes, so this low now has been tripped here as well. Demand has been broken, market structure low has been tripped, which means you are looking for the supply that did that, which is here. Then this demand see here there, then it came back into this very supply, and this is where we want to take the trade. Now let's see the risk reward set up here. If you are taking the trade here and you have your stop somewhere around there, this will be our 3-to-1 reward to risk, right? So you are taking the trade on this box and you have your stop there. It just came into it, then it then broke this demand after touching this confirmation supply. It broke this demand, the lower demand, and then it came straight into where you have your 1 to 3 risk reward profit target. It didn't get to the 5, but we are okay with the 3-to-1, right? So that is for that. You have to be able to identify which structure is going to break. But then looking at this, there is a trend line. This thing I saw as well. This, okay, from this side we have this trend from this low coming in like this. Okay, see the trend line, it keeps following. It tripped it here, so you could have said here to be your supply. It will have worked as well, but then here it got tripped. The next candle came back inside, so this is a fake out to trap sellers. The time this candle was a solid candle below this trend line, people were shorting. Then it came back up to trap them and trigger their stop losses wherever they might have put it. Then this is the actual break. When this candle led to this break, it was a solid break and closed below it, and we didn't get any interaction with this trend line, but a pull away. So when when price retested the supply, it came back down. So trading with supply and demand, trading with market structure, trading with break of trend line, we are all trading this zone, right? Or retest of this trend line. Even if you are trading retest of this trend line, you didn't get it, but with supply and demand, we have it, and then a move away to achieve our 3-to-1 risk reward settings. And then that's another profitable trade. After the longing, the shorting was also profitable. So now coming here, okay, this 45 minutes supply has been broken. It was the one we traded for. Okay, even if you are looking, say, okay, because it's a 45 minutes supply, you want to take it to a 45-minute demand. Where will the demand be? This was where I highlighted the demand will be, because this was a channeled move, and then we have a strong move coming from this candle, right? So if you use the eye, you see it came here. Probably that was where we had our 3-to-1 risk reward. It was also a 45 minutes demand, even though it's not a so much strong one. Then we have a break of this supply on 45 minutes, which means there is a demand that led to the break of this. Like I said, this is the last red candle, right? This is the last red candle. It is not inside of it, it is just below it. But then we have a little move before we have this strong movement. And demand is not just about either you have a red candle or a green candle. It is where demand really came to the market from this. And where did the demand really came? It was below of this, bottom of this, the opening of that candle, sorry, down to this. So we'll be expecting price to come back in here and get a good reaction up. Then I also looked on the 15 minutes and I saw some interesting zone on the 15 minutes. So what I saw on the 15 minutes was that I saw this side, then I saw this movement. Let me remove that quickly and let me use this. I saw this movement. Remember, that is a bullish structure, right? And this trade is already bullish, right? The coin is bullish on the 45 minutes. So when I saw this side taken out, this is also a pivot time. So when I saw this side taken out by this would normally be my demand, right? This green box here would normally be my demand. But then, like I said in the last video, we didn't get a good close above this high. Multiple times, we didn't get a close above this high. The first time, the second time, no close above it. So that is telling me that this demand, I do not want to trade it. Even if I want to trade it, I have to trade it with big caution. Now, when it came to this very candle, it came into it and then it reacted where? Let me see how much it reacted from the edge up to the highest I made. It made a 1% move. Traded that with good leverage. That's something. But then I do not want to risk it. And he said the next time it came back to it, it got broken. So this was the origin of the move that led to the break of this high, which I will be trading. Then when price came into it, we got a reaction. Don't forget, this demand is still also a demand, even though it's not a strong one. And what led to that break of that is this supply here, which is why when price came from this demand back to this supply, because this supply broke this demand, we have a reaction to the downside. We have a reaction to the downside the first time up to this low 1.13 from here to here. Then the second time into it, we have a reaction to the downside back into this very demand. And remember, the first time of a demand, the first test of a demand is always the best. So this will be the best test of this demand. But let's look into the lower time frame, as this 15 minutes chart now for this structure is our major time frame, right? Is the 15 minute for our, as a scalper for our major time frame on this. So he wants to go into a lower time frame to see the reaction. If I haven't seen this, I went to the lower time frame to see what is coming to happen. So let's quickly go there before our time elapse. So you do not want to go to the 5 minutes from the 15 minutes, because it's just a 3 candle setup or 5 minutes that makes up the 15 minutes. So here I will be going into the 1 minute time frame to see what really happened. This is the second test here. So okay, this is the first test here. I don't want this to be too big. Okay, now look at something here. This is the first test of it. You have like a touch and go, right? It touched the demand and it came back up 1 point something percent. Fine, but that one you do not want to trade it. Now you are looking for the supply, the last supply that sent price into the demand. This is the demand where we are waiting, right? And this then is the supply. Price came back to it, it came back down, creating a lower low. Now you may be looking, this may be your supply breaking this pivot low, right? This can also be your supply breaking this pivot low. You have like a drop base drop, you also have a drop base drop here. So which of these two do you want to use? You can just use the two together, right? You can join the two together. So this won't be our supply anymore, but then let's join these two together and see. You can use the higher one because you do not want to make mistakes with your trade. That is why you have to be careful. Then we have price coming back into it, then making another lower low, right? This is market structure, right? We have from this side to this low to this lower high, lower low, lower high, lower low. Then what happened there? This lower high got taken out. This is the last high leading to a lower low, right? And remember, I said when such high breaks, market structure is shifting to the upside, and it got tripped there. Then okay, then there is a cash again. This won't be our supply anymore because we now have a lower low from a high leading to a lower low. And what do we have from there? We have another supply, which is here. Let me remove this demand so you can see. So which is here. We now have a new supply leading to this break of this low, right? So this is a supply and this is the proximal line of it. And what happened when this market structure got taken out? The supply also got tripped. So what led to that tripping? We have three white soldiers here. Then we have just a red candle before it, which we then serve as our demand, which is this. So this is a demand leading to the break of this, what's it called? Break of this supply zone and a break of this structural high. Then one more thing, Let's see the trend line again. Really a trend line from here, like this. You see the trend line? Where did it break? It broke here. Then it have another move away before coming back into it. And this is the last zone that broke the trend line, broke the supply, and broke the structural high. Then we have a retest of it. Let me remove this trend line. So we have a retest of it here, and then price flew away. Now using our risk to reward tool again from this side, then maybe we just place our stop just around below the box. We have our 3 to 1 here, our 5 to 1 here, and when price retested this zone here, it came directly to the 3 to 1, then retraced a bit, then approached the 5 to 1 risk reward ratio. So instead of risking this full zone on the 15 minutes, leading to how much risk? Okay, 0.36%. Then we are just risking how much percentage? We are just with 0.19. You see that this is low risk than this, and then this is higher probability because your target will be achieved quicker than this. Okay, let me use this tool so you see again. From this side to this low, right? This is okay, this is where we have our 3 to 1. Let me use the same tool on this very zone and make it thicker so we can differentiate it. Okay, you see where we have our 3 to 1. The first 3 to 1 from this zone is here, where we have the 5th ratio for this tiny zone. This is the first one. Let me make it thicker, or let me just change the color to green. Okay, so from this one we have this, which is our 3 to 1, and this is our 5 to 1. Whereas trading this full zone, this will be our 3 to 1 and this will be our 5 to 1. That means when you risk an $100 here, at this place you are making $500. Whereas when you risk $100 on this big zone, where you are making $500 on this smaller time frame zone, is where you are making $300. So you see, this is low risk and high probability, even high reward, as your target will achieve quickly. So that is it, guys. But one more thing. My time is gone. One more thing. Okay, this supply is still holding from the 15 minutes. The supply is still holding. Maybe to break this demand, and if this demand breaks, then what will happen? We will have a new supply, right? And the new supply will be from here to here. If these demands break, but it's now a broken yet, we are still waiting for it to break. If maybe it's time for us to retest, maybe it's time for us to do this, maybe it's time for us to do this, and then probably run back up. So there is one more thing here. Like if you are trading like this zone, the last confirmation people watch for, maybe this is a major time frame, right? And they want to trade on that major time frame. They do not want to look any lower. What people do is they once price is coming back into the demand zone on that very major time frame they use, they want to see something like maybe pin bars. Maybe they want to see dragonfly, doji, blah 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 blah, whatever they call it. But they want to see a pin bar. Some want to see a bullish engulfing candle while approaching the zone. Like here now we have a bearish engulfing candle. So the moment they see the bearish engulfing, they take a shot. Here from this demand coming into this little demand, they want to see a pin bar. Once they see the pin bar on close of the pin bar, they take a long. Like here, we have this pin bar here. Then as the moment this pin bar closes, they take in the trade and they have their stop just below it. That is if you want to use the very time frame you use as your major time frame to also take entry. If you do not want to set and forget. Set and forget is placing your limit order on the proximal line and having your stop just below the distro line. Or vice versa. This thing is, don't forget there with it. So that is it. You can watch for a pin bar, you can watch for a bullish or bearish engulfing price action when it approaches a zone. You can watch for 3 white soldiers or any other bullish or bearish price action patterns that you do work with. You can even find normal patterns. You can find normal patterns. Maybe price is coming into the zone and it's coming in a channeled way, a bull flag. So you know bull flags will break up, right? So you are waiting for the flag to break up, then you take your trade. Now this 15 minutes, this zone has broken. This one has broken. That means we have a valid supply here. That means we have a valid supply here now. So if price comes back into it, it's a short. And what do we have here? See another thing. My time has gone, but pardon me. What do we have? We have this side to this low, back to this side. Now we have a lower low. Is that not a bearish market structure pattern? It is. So you expect price to come back here and go back down. Then once this high breaks, as it is now, it can change. Once this side breaks, then it becomes bullish again, right? But I'm expecting price to come to this green zone before having any reaction to the upside. It might get here and decide to return, and but it should also get here. Then I'll take the trade. So that's it on confirmation trades and multiple time frame analysis, guys. If you have any other question that you do not understand, kindly ask. Please do not forget to subscribe, like, comment, and also share this channel. Thank you very much. And one more thing, I forgot to make the smart money video. Hopefully I'll do it very soon. I had to make this video for Elise on me, so that is why I haven't done the market structure. I mean, sorry, the smart money and institutional traders, but I promise you it will come next. Thank you very much.